Welcome to The Business. I'm Lanre Akinola. On this show, we break down business and its impact on Africa and Africans. Business affects every one of us, whoever we are, wherever we are. This week on The Business, can mining be sustainable and profitable? Anglo American, one of the world's biggest miners, believes it can. South African President Cyril Ramaphosa warns that Zimbabwe-style land grabs are not a solution to the huge racial disparity in farm ownership. He says they will not be tolerated. And Nigeria sets a date for overhauling its refineries, saying work could begin as soon as the next quarter. Can the country finally break its dependence on fuel imports? And this week's big story, French President Emmanuel Macron has pledged 700 million euros to the International Solar Alliance at its founding conference in Delhi. The initiative aims to mobilize $1 trillion into solar, and most of its members are in Africa. In the breakdown, we examine the success of Ethiopian Airlines. Halfway through its 15-year strategic plan, it's growing by an average of 25% a year and is the undisputed market leader in Africa. What's the key to its success? Joining me throughout is business reporter Thomas Collins. And in part two, I caught up with Ibukun Adebayo, head of emerging markets at the London Stock Exchange, to talk about markets in Africa. We start with the news that Anglo American, one of the world's biggest miners, plans to invest more money into being sustainable. They want to put $200 million a year into being a better citizen and hope to actually make more money off this. The idea is to do well while doing good. Tom, I'm going to come to you on this. Doesn't sound like a traditional mining approach.
No, I think gone are the days when pure resource extraction was a thing, and now companies have to stay ahead of the curve, engage with local governments, local communities in order to be profitable, which is what they're proposing.
A move towards more sustainable business globally in general?
I think so, yes. I think it indicates the appetite of the consumer and of governments.
What's the bigger picture here?
So the bigger picture here is that they have to get mining companies have to engage more with countries and communities in order to be profitable. Making $9 billion by 2030 is obviously, they're putting that into their strategy, and I think it will eventually pay off.
So you think it's more than just talk?
I think it is, yeah. And then they've in fact said that they have to use 30% less fresh water in their mining operations, and I think there really will be some kind of implication.
A shift towards more sustainable business globally?
I think so. To stay profitable in today's market, you really have to be sustainable, and Anglo American are doing well by using 30% less fresh water than they did in the past and engaging local communities to be sustainable and to provide services.
So is it more than just words? How do we make sure that they actually follow through on this?
I think following through for them is a question of just holding them accountable, and also I think we should look to DRC today, this week. The mining news has been huge, and the government there is no longer willing just to accept companies like Randgold, companies like Glencore coming in and taking resources with very little money given back.
Thank you, Tom. Interesting times ahead for the mining sector. In South Africa, President Cyril Ramaphosa has warned against Zimbabwe-style land invasions. The country is pushing through a plan to drive expropriation without compensation, which has got markets worried. Tom, should investors be concerned about this?
Definitely, yes. I mean, this is reminiscent of Zimbabwe 20 years ago, which had disastrous economic effects on their country, agriculture, the whole kind of thing. As South Africa moves out of recession, moves into a new administration, they really should be looking to attract investors, and this law does exactly the opposite.
But there is also a necessity to do this. Land reform is a serious issue in South Africa. Most of the land is still controlled by white farmers.
Correct. 72% of land is owned by white farmers in South Africa. So I think this is really... Also, we're seeing Julius Malema and the EFF, the main opposition party in South Africa, pushing for this to kind of get some post-apartheid renegotiation.
But Ramaphosa seems to understand that. He seems to be quite investor-friendly. Do you see a scenario here where South Africa can navigate this tightrope? It's obviously going to be tricky, but is he the right man for the job?
I think he is, yes. On the whole, he's been very open and very keen about attracting investors. He just has internal pressure from within the party and within the fractured ANC to really put and try and renegotiate these land laws. But I think on the whole, it's not indicative of a greater picture.
All right, thank you very much, Tom. It's going to be a tricky road for South Africa, but we'll have to wait and see what happens. In Nigeria, the government has announced that plans to overhaul the country's oil refineries could begin as soon as the second quarter of this year. We've been here before. Nigeria is notorious for its reliance on fuel imports. Tom, I'm going to come to you. What makes this time different? We've heard this story before out of Nigeria. Any confidence that this might be a turning point?
Well, yes, this has been a long-running conversation on the ground in Nigeria, and I think the NNPC has got 3 refineries with 445,000 capacity per day, but yet there's been a lack of investment in the sector. People are also concerned that public-run refineries are not up to the job.
Those refineries, they don't operate at capacity, do they?
No, last November it was 3.2%, ranging from 3 to 30% capacity. So people think on the ground, I mean, it's positive, but again, they're looking towards people like Dangote to really get the private sector behind them and really make a change. So the import bill in Nigeria is brought down.
Yeah, so you mentioned Dangote, Africa's richest man, obviously Nigeria's richest man. He's building a refinery. Is there a case here maybe that the private sector can step in and should step in, and you know, maybe the government isn't the ideal body to lead this?
100%. I think on the ground it cost 19 billion for the new refinery coming online in 2019, and that capacity is actually 650,000, which would be more than enough to provide Nigeria with the petroleum products they need and also to export to other African countries.
Thank you, Tom. Well, the NNPC has spent almost $6 billion since late last year, so hopefully they can finally make some progress on this. For a big story, France's President Emmanuel Macron has pledged 700 million euros to the International Solar Alliance, which had its founding conference in Delhi over the weekend. Is this good news for Africa? Most of the alliance's members are from the continent, and the initiative hopes to catalyze $1 trillion worth of investment into solar power generation. Tom, sounds exciting. Should we be excited about this?
Well, I think you're absolutely right. 121 countries in the alliance are, well, there's 121 countries, and the lion's share of these countries are in Africa. So for the amount of money being put into this initiative is really huge. And I think if they can capitalize on this investment and draw some of that to Africa, then there'll be a big effect on the continent.
How viable is solar in Africa as a market? I mean, it seems like a no-brainer. Why haven't we seen more investment to date?
Well, simply put, Africa is a huge market for solar, obviously due to the sun. And I think there's been less investment right now because they've been looking at more kind of oil, different forms of energy where they can really make a greater return. But with the increase of sustainability and the importance of solar providing cheap energy, it's actually dropped in prices to operate solar in Africa by 80% since 2009. So the more that the operations cost goes down, the more investment we'll see and the more it will become a viable form of energy.
That's an important trend that you pick up on there, that the cost of solar is coming down. It's not competing with, you know, traditional sources of energy like coal and oil. So, you know, can we expect an upswing here in terms of countries making the transition towards solar?
I think so. With countries like France backing the initiative, they've put 1 billion in already, and this International Solar Alliance and the Paris Climate Agreement in 2015, we're likely to see much more solar on the ground.
One of the interesting trends that we're seeing as well is off-grid solar projects. There's been quite a few announcements this year of, you know, startup companies out of Silicon Valley raising tens of millions of dollars to do off-grid energy, which is important because national grids in Africa aren't particularly well developed. So is solar also a way of bridging the rural-urban divide when it comes to power generation?
100%, and I think solar tech is gradually a rising thing in Africa. Feed-in tariffs are gradually becoming more apparent, so you put money back into the grid and you make money for yourself. So I think, you know, it's happy days.
Thank you, Tom. Looking forward to that. 600 million Africans still don't have access to power, so hopefully this makes a dent. For our breakdown, we look at Ethiopian Airlines, the undisputed market leader in African aviation. The company is pursuing an ambitious Vision 2025, and the aim is to become the most competitive and leading aviation group in Africa. Tom, turning to you, sounds like the plan is going pretty well.
Well, yes, I think it's all about strategy for Ethiopian Airlines. Tewod Gebremariam has got a really clear vision.
That's the CEO?
The CEO, yeah, of what he wants to achieve in the future, and he's kind of brought everyone together. They're really leveraging their expertise and their skills based in Addis Ababa in Bole International Airport to become a hub for the whole of Africa. They're growing at 20-25% per year, which is huge compared to other African airlines. Recently, South African Airlines fired their CFO, which is in comparison to Tewod Gebremariam, who's not the CFO but the CEO. I mean, there's just a huge huge disparity between them and everyone else.
There was an interesting story this week where Ethiopian Airlines had the first all-female crew flight to Buenos Aires, and they were welcomed by the Argentinian president. I mean, this is the kind of PR that you usually associate with, you know, Gulf State Airlines, Qatar Airways, or Turkish Airlines. It doesn't look like an African story at all.
Exactly. I mean, we were all very pleased to see that flight land in Buenos Aires, and I think everyone applauded it from behind the scenes. But the main implications of this are is that they're flying to more places. They're using their base in Addis Ababa.
They're also not messing around when it comes to their fleet. They were the first African airline, actually the second airline globally to take delivery of a Dreamliner. They now have almost 100 planes and 60 more on order. Sounds like there's a lot more growth coming.
That's exactly it. They're using Airbus, they're using Boeing, they're bringing all the major and the best carriers into Addis Ababa, and they're using it to expand from there.
Tom, thank you very much for the insights. Very interesting times ahead, very exciting times ahead for Ethiopian Airlines. We'll take a break now, but join me in part 2 of the business. A short while ago, I spoke to Ibukun Adebayo, head of emerging markets at the London Stock Exchange. He had some very interesting things to say about markets on the continent. Welcome back to the business. Today, I'm joined by Ibukun Adebayo, head of Middle East, Africa, and South Asia in the International Markets Unit at the London Stock Exchange. Ibukun, capital markets in Africa. The year is off to a good start. Commodities are up, growth is up. We've heard all sorts of buzz around the Nigerian Stock Exchange. Good year for Africa in store, good year for African capital markets in store?
I think so. So ultimately what we're seeing is a real opportunity for the markets to progress. This year we've seen, I think what we'll see is a lot more brisker growth across the economies. And the economies essentially are being driven by easing of monetary policy by all the central banks, which in turn is leading to a lower inflation environment. And I think these, just in the technical sense, are very, very positive for stock market growth. It's where you go to get your returns. So I think ultimately we need to balance that view a little with some of the usual effects of capital market volatility across Africa. So maybe that's external shocks like we saw 2 years ago with the oil price issue, but then equally as well other factors related to governance and transparency. But ultimately, I think there's some real positive opportunities for the continent this year.
Now, Nigeria's done very well. I believe the NSE hit a new record high in January. On the surface, it's good news. It's been in the news a lot. It isn't necessarily that clear what it all means. So it's obviously good for investors. Is it also good news for Nigeria? Why is it important that the Nigerian stock market is picking back up in terms of wider economic activity?
So I think you're right, and maybe it's interesting to very quickly look at the numbers. I mean, this year alone, we've seen a 12% increase across the market capitalization for Nigeria. Interestingly and incidentally, that's marked with what we feel is a 12% undervaluation of the Naira. So that actually very neatly balances out. So ultimately, you're right, there needs to be a fundamentals turbocharge to see that growth continue. I think ultimately what the stock market performance does is to offer that opportunity to investors, but equally, we as stock market operators believe very, very strongly in this notion that using markets to create wealth and jobs is ultimately very, very important. But it's the right series of opportunities. And I think in order to see a real balanced continuation of that growth, we need to see greater diversification of companies on the markets in Nigeria in particular.
And that's the key thing here, right? Like, growth in the markets is fine, but ultimately what we need to see is markets driving meaningful development across Africa. We've spoken a little bit about Nigeria. When you look across the continent, on the whole, markets are still relatively illiquid. As you say, there's a need to diversify that base. What are the chances, or how confident are you that this is happening, that this is going to start, we're going to start to see some meaningful diversification of companies that are listed, and by extension, job creation and other sort of key economic things like that?
I think diversification is a necessity that will happen, and that's needed for just general economic well-being for all of those economies. I think in Nigeria we have seen some more companies from different sectors who've become more priority sectors. We've seen infrastructure players, we've seen the emergence of financial technologies, different types of players of that nature, which I think will be the harbinger for future growth. In countries like Kenya, we've seen that very, very, very obvious opportunity there for the fintech community. And I think the bellwether is being set by, and the benchmark is being set by Kenya, which will follow across the rest of the continent as well.
So we've spoken about Nigeria, you've mentioned Kenya. What are the key markets to look out for in Africa in 2018? And what are some of the prospects in a place like Kenya? We haven't spoken about North Africa. We haven't spoken about Southern Africa. The JSC is, of course, the big one. Overall, give us a bit of a take on what you think are markets to watch and why.
Sure. I'll surprise you here and say that I think Ghana is going to be a very interesting market to watch.
That is a bit surprising.
I think given the oil price stability and I think steady growth, that's obviously going to impact Ghana very, very positively. But one of the surprising things is that Ghana has been very, very consistent in terms of targeting its fiscal growth and targeting its fiscal budget, and has kept in that target over the last year or so. And I think that's very encouraging. That financial discipline is very important. Markets like Egypt, I think, have been extraordinarily interesting, and we have a key focus there at the moment. And obviously, Egypt has met all of its covenants under the IMF loan conditions.
It's a $12 billion loan they took.
$12 billion loan, absolutely. And I think everything there, from increasing revenues through privatizations, a plan has been announced there, is being stuck to VAT increases to ensure that there's a decent balance of revenue to actually spending. Egypt has been very, very prominent on international capital markets, listing bonds to the tune of $9 billion last year. So I think very encouraging. Broader than that, I think we will also see maybe the outside bets for growth this year, probably a little more so on the Kenya side and Zimbabwe. And I think the political environment there will drive the growth opportunities there. Maybe not in 2018, but we'll see the start of growth for 2019.
So you use a key phrase there, the political environment. This is always, no matter, you might not like the politics, but if you're in business, you have to care about the politics, and it's always looming large. We have elections coming up in Nigeria and South Africa. The build-up has already started. Do you think there's a bit of risk there that governments might take their eye off the ball a little bit? The governments understand that, look, you've got to get this right. You've got to, like Ghana, stay on top of things. Do you have the confidence that that is sort of there, never mind what distractions there might be by way of elections and politics?
Sure. I think broadly speaking, governments have been very, very sensible in keeping out of the way of business or aiding, assisting business as and when is needed. I think we've now been able to basket political risk alongside concentration risk and currency risk. It's not overt in the respect that it used to be previously, where you would see a cataclysmic breakdown of any form of economy based on a change in government or a series of change in policies. I think we can have that confidence across the continent at this moment in time.
Kenya is a good example of that. We had quite a serious constitutional crisis last year around the election, and 10 years ago, you would have had people packing their bags and getting on planes and heading back to London and New York, but that simply hasn't happened this time, which is a testament to what you're describing. Now, we've spoken about African markets. You're at the LSE. Where does London fit into this? How do global exchanges like London come into the picture here? What's in it for you, and how can the LSE help drive market development on the continent and ultimately drive growth and development?
Well, I think we're in a very privileged position, Larry, and the LSE has for a number of years been a market partner to the continent. And what I mean by that very specifically is that we've helped to bring and conduit flows of investment capital from overseas into the continent, either through listed companies or through other vehicles and measures. Today we have a very strong franchise in terms of our dual listings business. So we work very closely with exchanges like Morocco, Nigeria and Kenya, where we actually have partnership agreements to encourage dual listings. So to broaden the investor base that is now investing into the continent directly. Beyond there, we have tried to create what we call a depth of capacity in the market to ensure that African markets meet and operate along the same standards as international markets. This is very important for long-term growth and long-term development of capital. So everything from placing in new technology that runs at high speed to allow high-frequency traders, to providing market surveillance systems, and generally partnering on developing Africa-specific solutions to Africa capital markets problems is where we have our focus.
Now, Africa isn't the only market you cover. You cover the Indian subcontinent, and your overall title is emerging markets. How big is Africa for the LSE compared to some other emerging markets? Because it isn't always necessarily the obvious place to be.
Yeah, that's a very good question. So, without going into the detail as to what's classified as an emerging market or a frontier market, I mean, Africa is just really where we feel that our assistance can make the most difference. African capital markets, I think, have traditionally been blighted by lack of liquidity issues, policy regulatory gaps, issues around information asymmetry, so lack of simultaneous dissemination of information. So we can really make a difference there, and the LSE is not only doing that, but I think most importantly, Larry, the point I wanted to raise is that we have seen that the focus in Africa in particular needs to be specifically put in towards SME development. And in that relation, there is a lot of work to be done in terms of making companies more investable at an early stage.
We're almost out of time. It's a shame we didn't get onto this point earlier. That's a key point. Very quick question. I'm not sure if you want to answer it. Any interesting deals in the pipeline? Can you give us a sneak peek at anything that's coming up, or is that confidential?
Lamri, I would always be willing to give you a sneak peek after something has come up. So that's not an issue at all. But we remain engaged on the continent and engaged with the opportunities, and there are many of them. And we hope to see some fruition of that in 2018.
Great note to end on. Ibukun, thank you very much for joining me on The Business today.
Thank you.
That's all we have time for. Thank you for watching The Business, and please join us again next time.